Hello everybody, Brian, quantlabs.net. Wanted to talk to you about finally moving averages. Now, in case you haven't seen, I just put up 2 videos in the last few days. I'm just going to my channel here, Quant Labs on YouTube channel, Quant Labs. So if you go into the videos section, there's 2 videos I've just talked about. One called Using Fibonacci Retracement Level for Price Target Moves for Support and Resistance, and another one just posted, one called Testing Up and Down Trend Line for Support and Resistance Line. So now the third indicator I'll be using, which all comes out of, again, and I talked about it in the first video here, is Nick Trades. So this one comes from Nick Trades as well. I do like moving averages because they work real well. So I am going to start on this is just a random cryptocurrency pair I've downloaded. This is for you, as you can see, 365 days. Crypto never closes, so its actual trading days are included with weekends and holidays. So here's our first chart. These charts are courtesy of Chart Director, as you can see here. First thing first is we've got 2 other indicators which I don't use as much, the RSI and the momentum. Momentum I'm using more of because of the moving averages combined with the trend lines really help there to define trend at that point of when a price might hit one of the trend lines, the upper or lower, when it goes into some kind of simple wedge, or I've shown hopefully one of kind of like a classic channel. And those 2 trend lines can really show some typical patterns, including wedges. I've seen some flags, very rarely, some channel, and what's the other one I can see? That's pretty well it. So momentum is very helpful to determine that. RSI obviously is to help measure the condition if it's overbought or undersold. And then we also have here the Bollinger, which I don't really use a lot at all. But what I want you to pay attention here is the moving averages I'm focusing on. Obviously, this video is on that. So you have a simple moving average 20, simple moving average 50, and an EMA, which is a slower one, at 200. So here you can see that we have our candlesticks with our moves. As you can see here, now this is for the last 365 days. Along here you can see the volume. So I'm going to go into now the, let's say the 6 month or the 180 days, or roughly around 6 months. And this one's a little easier, but it'll get easier as we move ahead. Here you can see RSI has hit way overbought in around here, and some other points along here. The volume overall since January has pretty well died off, as you can see, next to no volume at all for this cryptocurrency pair. You can see some big moves here in the bars themselves. So I show you that again in the 90-day. Wow, we're getting really breaking them all down. So here, nothing's changed, it's easier to see things. So now, if you study the moving averages here, the moving averages here at this period, here to roughly here, sorry, here, they diverge quite a bit. So there's a bit of breadth between the SMA and the SMA 20 and the SMA 50. And even more with the EMA 200. But here's where it gets really funky. See how here along this period the moving averages start to tighten? That basically now verifies, is why I like moving averages, that something's going on where those 2 averages are are starting to narrow, which means there's now less trends and less movements, as you can see here. So let me show you on the 30-day chart. So as I said here, since about this point, you can see there was some good volume. You've got a good bar here, and the volume on the long run has really slowed down, as well as you can see the RSI has really dropped off, as well as the momentum. So everything's working in tangent. But here's where the funky stuff comes along. So on the 30-day, you'll notice here that virtually there is no movements between these moving averages whatsoever. And then here we have our EMA, if I'm not mistaken here, but our EMA here is getting tighter as well, and that's a 200-day moving average. So the 50 and the 20 really tighten up, and this is where the trend is really helpful to figure out what's going on. But as I said, what really depicts something where the breakdown on the price is dropping off, as I can confirm the RSI is dropping off, as well as the momentum is pretty well in the toilet. And you can also notice that we finally have dates on this particular chart. So these moving averages are very helpful, especially when you get in these tight constraints that we've had over the last few weeks in June, when virtually, I mean, right along here, it's just there's very little divergence between the moving averages. I mean, you can't even see the difference if I can pull up my my 90-day. So back here in June, you can see things just started to go really crazy as it's starting to really tighten up. But yeah, things started to break down over the last few weeks, and that the moving averages confirm that. So that's why I like using moving averages. Now, when you factor in these type of trends, when the moving averages diverge, we got trend, and we can trade it really well. But we will run into problems in trying to find trend when, as I said, these moving averages, the SMA 20 and 50, really tighten up. So this particular pair is not obviously a good example, but in the 90-day, or sorry, I think even in the 1 year might be, or even the 6 month, let's say, you can see that there's quite a bit of divergence between all the averages. But as soon as it crosses here, we got problems. So there's that, and there's something else I wanted to mention, but I'm hoping my fog memory does not forget. Oh yes, let's go back to the 30-day. Okay, so the next steps. This is very helpful. So right now, as I said, we're entering into a period where there's been no movement on this particular cryptocurrency pair, as you can tell, because the moving averages have tightened up. But here's the thing, is that we've got this massive bar move up, and also you can see the spike in the candlestick wicks here. But here's the funky stuff. We have a line that we can use. I can't remember the name of it, Mariposa, who knows. But once the next day this drops, it's safe to say that if that candlestick drops more than 50%, chances are we have a potential market reversal on our hands. On top of the following few days, the trend or the formation of these candlesticks may turn into something called Adam and Eve pattern. And it's just another way to verify that a market reversal may be taking place. And what we would also be looking for as these candlesticks start to take hold, doing their up and down thing, we're going to be looking for the averages to hopefully diverge a little bit and open up. So that's one way to verify the market turn if we start getting our candlesticks more positive, more green. On top of that, we can also use the trend lines that I'm trying to use. As you'll watch, if you ever watch that video I just put up, where you can see some classic trends moving up as well, or classic trend moving down, or if it's going into some form of a wedge, and I'm referring to this video again, trending up and down trend line for support and resistance line. So watch that to really hopefully understand that formation if we ever have a market reversal on hand. So I'll be coding that up the next day or so, put up a video on that. And that's pretty well it for all the Nick Trade stuff. Because I will tell you from my experience, this right here is the hardest type of trading there is on the planet. Even if you're just doing end of day, I couldn't imagine that intraday is much better because you're getting small moves. And to me, it's just too noisy. That's why I like the end of day charts or daily charts. And I think once I can verify that this Adam and Eve pattern may work, then we may have something pretty well all scenarios covered off, and then I can proceed moving on to the other areas that I want to move into that is already pretty well coded up. So there you go. I just want to share this simple moving average one and how it can work and how it can help you out with some tips. And again, we shall talk to you later. Have a good day.